Welcome back. Now, for the first time in history, South Africa has gotten China to agree on a trade deal relating to 5 stone fruit. Typically, only one is negotiated at a time. Amid the heightened U.S. tariff environment in a bid to diversify export markets, the country will now export apricots, peaches, nectarines, plums and prunes to the East African nation. Thabile Nkunjana, agricultural economist in the Agro-Food Chains Markets and Economic Research Division of the National Agricultural Marketing Council, joins us with his assessment of what this milestone means for the local agriculture industry. Thabile, thanks so much for your time this afternoon. As mentioned, Department of Agri securing that deal to export stone fruit to China. This deal being sealed faster than expected as well. Let's just zoom in on the significance of this move.
Good afternoon to you, Ansauling, and the Business Day viewers. Yeah, so this is it's a milestone, specifically for the stone fruit because for some time this has been an industry that has been quite challenged in terms of at least at the production levels. If you have to look in terms of what they've been producing over the years, and of course in the quantities, but at least the positive has been that the export we've been seeing some growth. So generally, this is a good stance. This is going to boost these industries within the stone fruit.
Now, diversification has become the name of the game when it comes to mitigating risks associated with that 30% tariff that was hit by the U.S. But it's not a magic pill, right? But by the looks of things, it seems like this is how we are approaching things, just trying to find alternative markets. What do you make of that strategy?
Yeah, so this is something that South Africa has been pushing for some time, Sauling, just that now it has been, there's an urgency into it. So before we've been pushing it, but not to the extent that we are currently doing it. Mm-hmm. And also I must, I emphasize the fact that even though we are pushing harder for the diversification, it is not necessarily say to replace the U.S. market.
Yes.
The U.S. market does remain a market that South Africa will not be able to overlook for a number of reasons, but for now, it is important that we do really, push for the diversification because with the diverse products across the markets, it helps in terms of cushioning the impact should there be trade issues like the current ones, the 30% we are facing from the US. So therefore, diversification from the mid to the long term, it's something that South Africa, is looking forward to, so that we really get to keep, everything that is in terms of our and of course the introduction of our export, to the world market.
And how much of a cushion, right, does diversification give an industry like the citrus industry, right? We do know that the U.S. market is quite important for that industry.
Yeah, it is important. I remember that, we've been, when people look into this whole tariff thing, they look into it in terms of the 4% that account of which USA markets account for. But when you're looking to specifications in terms of the products, the citrus, which includes the likes of oranges, the soft other citrus products, and then that's when you'll be able to see the impact. And not only that, another key issue that I think we tend to overlook is that the US market tends to be a premium market in terms of the prices. Mm-hmm. So for the producers that sell to that market, it is important that they maintain it because they have developed, some investment on the basis that they have a premium market, and therefore they have been supporting, their businesses to grow. They are paying their loans, and of course, keeping up the numbers of the employment. As you remember that, for instance, Western Cape, which is at this instant is mostly impacted by this, is the province with the largest number of farm employers, at least primarily from primary agriculture. So therefore, any implications for that, province and the sectors of the industries like the citrus, then it has implications, for the socioeconomic, also livelihoods. Of a lot of folks that are employed within that industry.
Mm-hmm. And while we are seeing government sowing its seeds elsewhere, as you mentioned, we still regard the U.S. market as, important. And with that being said, the Department of Trade, Industry and Competition and the Department of Agri held a joint briefing earlier this week, telling the media and everyone in South Africa that another deal was submitted to the US. How positive are you about that deal and the likelihood of it going through and actually reaching the right people from the Trump administration, and whether we'll actually even get an answer from the Trump administration?
We are very optimistic and Sauleng about the whole, processes that are being taken by the state. Of course, we are working with the industries, but what is important is that the state does get in touch with the relative folks within the US. And of course, I think that was last Friday, or even the presidents did manage to get hold of the administration and talk specifically to the president himself, to try sort of get to cushion things and also to level up some misunderstandings where there are any. So generally, we are positive, but because of the fact that, of course, we also, there's been additions in terms of what the South African government had offered previously to the US, government. So with the additions now, we are optimistic that that will yield, some positive results. Positive results mean maybe, if not to really remove the tariffs as we have been, getting in our products to that market, duty free, maybe to reduce them, so that at least we can remain competitive to our southern hemisphere, countries such as the Chiles, the Perus, and the Argentines that are sort of exporting their similar products, almost similar time with South Africa to that US market. So therefore, it's important that we get one of the two.
And just before I let you go, you touched on it earlier. It does seem like, the tariffs and the kind of trade environment is sort of speeding up efforts when it comes to, diversifying markets. And this also, working in the benefit of further implementing the African Continental Free Trade Area Agreement. What's your reading of what's being done and the push to also improve intra-Africa trade?
Yeah, the African continent, of course, for now, it remains the biggest market for South Africa as for its exports, specifically for agriculture and perhaps for other products. So it is important that we maintain, that relationship. And of course, the Africa Trade Agreement is also picking up a little bit. We've been seeing that a bit of an increase in terms of what has been happening as far as trade is concerned within that agreement is picking up a little bit for now. So that is positive. But again, as I said earlier on, that sometimes as much as we will want to have, a market that is paying a premium for your product, and also the demand of the product itself, because we might have products that we have been selling. Remember that, even before the products we've been selling to the US, Africa was there and other markets. So therefore, it was not a matter of South Africa just ignoring, Africa. There has been some bit of issues there, be it logistic and maybe tariffs for other and other issues, and other products for other products. So therefore, the specific products that are going to the US, they are mainly because there is also a demand for it, and also that the consumers there, they really need. So therefore, there's a demand for that. So now, if you think that you're gonna just take those to any market, it does not really work like that, because you might have oranges, for instance, and then maybe apples and something else to send to Africa. But now the question is, how much Africa does it buy or consume of that, and how much of a price in terms of the margins are you gonna get? Because agriculture's profit is a business. So producers and exporters, they want to make money out of that. So therefore, if you had to compare, the two markets or the three of any other market, so those are some of the things that you'll want to take into account when you are trying to diversify a market. So it's just a matter of just taking one product to another market. It does not work like that. There are a lot of things that one needs to take into account of this.
All right, let's leave it there. Thabile, thanks so much for your time and sharing your insights with us this afternoon. That was agricultural economist Thabile Nkunjana from the National Agricultural Marketing Council.